Hey Big Bulls, welcome to the first edition of 2025. Here are the hot topics for this week. Adani's petchem expansion. Is this a gear up to challenge Ambani's Reliance? What's behind the ITI stock doubling in just a few days? And the recent stock market sell-off. What's next for Sensex and Nifty in 2025? Looks like the corporate rivalry between Adani and Ambani is about to get more intense. How? When Adani prepares to take on the powerhouse Ambani in an area where Reliance has long been the dominant player, the refinery and petrochemical sector. What happened? Well, this week Adani revealed that it's teamed up with Thailand's Indorama Resources to create a joint venture. Both Adani Petrochemicals and Indorama will each own a 50% stake in the new venture called Vellore Petrochemicals. All this is to set up refinery, petrochemical and chemical business. This ties in with Adani Group's plan to invest $4 billion in petchem plant in Gujarat, including a 2 million ton PVC plant, which they had announced in 2022 after the group had launched the subsidiary Adani Petrochemicals in 2021 to build up the petrochemical complexes. Now, PVC is the third most common plastic made globally and is used for stuff like raincoats, plumbing pipes, medical gear, wine insulation, credit cards, etc. Now a bit about Indorama. Indorama Ventures, based in Bangkok and founded in 1994, is a global petrochemical giant, operating in over 35 countries. It is run by Indian-born plastics tycoon Alok Lohia and is a major player in polyester production and wool yarn manufacturing. So this partnership will give Adani the upper hand to leverage Indorama's expertise in the business. This is just when Adani Petrochemicals is building a big petrochemical cluster in Mundra, Gujarat, with a PVC plant that's set to be India's largest, costing about Rs 35,000 crore. The new factory will also have wind and solar power to meet its strategy needs. They had even teamed up with BASF to set up another chemical plant in Mundra, but it's unclear what's happening with that. And not to forget, all this gearing up is happening just when Reliance Industries has also planned to triple its PVC production capacity by building a huge plant in Dahej and also in Jamnagar, which it aims to wrap up by 2025. Now let's talk about ITI stock update. Once known for its iconic black rotary dial phones during the license Raj, Indian Telephone Industries or ITI Limited suddenly caught the eye of a new wave of investors in the last few days. Its stock surged, doubling in less than 10 trading sessions, with its market cap even crossing over Rs 50,000 crore for the first time. The big swings in the stock were mostly sparked by a surge in heavy trading. But what is this public sector company up to now? For sure, it is not making those old, outdated phones anymore. It had to evolve. So it did, by branching into new areas the government's been focusing on, that is, manufacturing telecom infrastructure and electronics. It is also in the most happening business these days, that of data centers. ITI has a high-tech Tier 3 data center in Bengaluru offering co-location, dedicated or managed services and cloud services. Its customers include government organizations, banks, financial institutions and others. They have also put forward a proposal to the Electronics and Information Technology Department for their data center and cloud services. Even last month, it secured a contract from the Uttarakhand government for mining surveillance systems. The company also plans to branch out into defense, IoT, e-governance and IT projects to stay ahead and updated. But it is a loss-making company with a Rs 70 crore loss on revenue of around Rs 1,000 crore in the September 2024 quarter. That raises the question of whether the loss-making status justifies the mad rally and valuation. And another thing to consider is that the government owns 90% of ITI and the rest is owned by the public. But even out of that, about 8% is with the Special National Investment Fund, which leaves only a 2% stake in public hands. So how much can investors rely on this? And doesn't this make it a really risky bet? Now, the first few days of the new year kicked off with a lot of market turbulence. Just in the first 4 trading sessions, the BSE Sensex crashed around 2,000 points, while the Nifty 50 shed over 2%. Worries over Donald Trump's tariff plans, the spread of HMPV, FII flows, a stronger dollar, inflation, growth concerns, and the cautiousness ahead of the Q3 earnings are all adding to the market uncertainty. And the headline of government saying India's GDP growth hitting a 4-year low in FY25 certainly did not help. But amid all this chaos and sell-off, what is expected for 2025? Well, Morgan Stanley believes that India still could be one of the top-performing emerging markets in 2025. In the global brokerage words, with strong earnings, macro stability and domestic flows, it is hard to argue against India's investment case. But another brokerage CLSA has slightly a different view. It says that Nifty's returns will likely be low in 2025 as stock prices are still pretty high compared to their usual levels and even its peers, especially with the global situation looking very uncertain and risky. They even mentioned that US President Trump's policies could affect countries like India and China that rely a lot on exports. There's also uncertainty about whether interest rates will be cut, and the US dollar is only getting stronger, triggering the Indian rupee's free fall. Also, the recent market adjustments and the government trying to cut back on spending are something to keep in mind. Although most experts are focusing on a few trends to watch this year: the earnings growth of Indian companies, the US trade policies, their impact on global trade, the union budget, and even the changes in global monetary policy while keeping inflation in mind. Well, that's it for today. We'll see you next week with another cracking episode of Bullseye. Till then, don't forget to subscribe the channel and hit that bell icon.